Welcome to this podcast series brought to you by 10 Leaves. Today, we're diving deep into the world of asset management in the Dubai International Financial Center, DIFC. This episode is your complete guide to obtaining and operating under a DIFC asset manager license.
Yes, let's get started right away.
Let's begin with some important updates. What are the key regulatory changes around the DIFC asset manager license?
There have been major updates to capital requirements. The base capital has now been reduced to US $140,000, and firms that only control but do not hold client assets are no longer subject to the expense-based capital minimum EBCM. For those firms that do hold client assets, the EBCM is calculated as 18 by 52 of annual audited expenditure. Also, from July 2026, we will see the introduction of activity-based capital minimums, which will bring further refinement to capital adequacy requirements.
That's a major shift. Has anything changed in terms of operational infrastructure like office spaces?
Yes, DIFC has introduced a dedicated fund center, the first of its kind in the region. Flexi desk spaces here start at US $27,000 annually, which also includes options for 3 to 4 visas. This lowers the cost of operations substantially for asset and wealth management firms.
Let's talk about why someone would choose DIFC in the first place. What makes it so attractive?
DIFC is one of the world's top 10 onshore financial centers and offers a secure and efficient platform for businesses and financial institutions to reach into and out of the emerging markets of the region. The quality and independence of DIFC's regulator, the prevailing common law framework, excellent infrastructure, and tax efficiencies make it the perfect base to take advantage of the rapidly growing demand for financial and business services in the Manasa region. The IFC fills the time zone gap for a global financial center between the leading financial centers of London and New York in the west and Hong Kong and Tokyo in the east.
Why should you set up a financial services entity in the DIFC?
The DIFC stands as a premier financial center in the region, hosting over 400 wealth and asset management firms that collectively manage more than $750 billion in assets. This strategic location provides unparalleled access to the extensive private and sovereign capital available in the region. Furthermore, the DIFC offers an advanced regulatory framework for digital assets, encompassing investment and crypto tokens. It also features a dedicated innovation hub supporting companies in the fintech, AI, and blockchain sectors.
And I hear there's been a surge in HNWI presence in family offices recently.
Yes, Dubai now houses over 72,500 high net worth and ultra high net worth individuals whose combined wealth exceeds $500 billion. Across the region, there's over $3.5 trillion in HNWI wealth and more than $4.8 trillion managed by 40 state-owned investors. DIFC has also seen a rise in hedge funds. 70-plus hedge funds are based here now, with 45 managing over $1 billion each. Family businesses have also grown by over 30% in 2024, with 850-plus now operating in the DIFC. The top 120 families alone manage over $1.2 trillion in wealth.
Outside of business, what's the environment like within the DIFC?
DIFC is a cultural hub as well. It hosts art nights, the Sculpture Park, and is a key backer of Art Dubai, the Middle East's leading global art fair. There are fine dining restaurants, luxury retail spaces, and galleries, making it an all-encompassing environment for work and lifestyle.
Let's get into the specific advantages of establishing in the Dubai International Financial Center.
Here are some specific advantages of establishing in the Dubai International Financial Center. First, the legal and regulatory framework. DIFC offers a robust legal system that supports cross-border business activities. It allows for 100% foreign ownership and places no restrictions on hiring international talent. Businesses also benefit from full capital repatriation, making it easier to move profits and assets as needed. Now, the tax benefits. The IFC offers a highly attractive tax environment. Subject to certain qualifications, companies can enjoy a 0% corporate tax rate. On top of that, employee income is not taxed, which is a major draw for top-tier talent. Counterparty confidence is another big advantage. The center is overseen by a highly regarded independent regulator. It has its own independent judicial system that operates in English and follows common law, distinct from the UAE's national legal system. This setup, combined with a risk-based regulatory approach, boosts trust and transparency for counterparties and clients alike. Then there's the diverse ecosystem. The DIFC sits at the heart of regional deal-making. It's home to a high concentration of international firms, investment funds, wealth managers, banks, and financial institutions. You'll also find top-tier regional and international law firms, auditing firms, and other professional service providers, making it the largest fund domicile in the region. And finally, its geographic advantage. DIFC places management offices, holding companies, and family offices closer to the assets they own or manage. With Dubai's strategic location, the center taps into the economic growth of the Middle East, Africa, and South Asia, a region that's fast becoming the new center of gravity for the global economy. Dubai also plays a key role in growing South-South trade, especially between Asia and Africa, positioning DIFC as a gateway to emerging markets.
That's very insightful. Now, please tell us what exactly does the DIFC Asset Manager license allow a firm to do?
Firms interested in managing client assets from the DIFC are required to submit applications to the Dubai Financial Services Authority, or DFSA. Asset management activities are discretionary in nature and can include managing assets. Discretionary management. The manager has the authority to make investment decisions on behalf of the client, within the mandate agreed upon. Assets must include investments. The assets managed must include at least one investment or rights under a long-term insurance contract excluding reinsurance. Belonging to another person. The assets are owned by someone other than the manager. Arranging deals in investments. Facilitation of transactions. Activities such as introducing parties, assisting with applications, negotiating contract terms, processing payments, transmitting instructions, or confirming transactions are considered arranging if they help bring about investment transactions. No authority to bind. Unlike dealing as an agent, an arranger does not have the authority to bind parties to a transaction. They merely facilitate the process. Advising on financial products. Giving a person specific advice about the merits of buying, selling, holding, or dealing in a particular financial product. This advice is tailored to the client and goes beyond just providing general information or facts. Arranging credit and advising on credit intermediation. It's about facilitating the connection between a potential borrower and a lender. No principal risk. The arranger typically does not provide the credit themselves or take on the credit risk. Their role is to set up the deal. Giving recommendations. It's about providing opinions, recommendations, or specific advice tailored to the client's circumstances regarding credit products. Merits of a specific product. The advice must relate to the advantages or disadvantages of a particular credit facility for the client. Distinction from general information. Simply providing general information about credit facilities, without specific recommendations or opinions on the merits for a particular client, would generally not be considered advising on credit. The DFSA has a fast-track process for fund manager licenses, which also come under Category 3C. The fund manager, if approved, can manage domestic funds, including public, exempt, and qualified investor funds. If the firm intends to offer discretionary portfolio management services, it must undergo a comprehensive licensing process. Firms that wish to engage in non-discretionary investment advice-related activities can opt for a DIFC investment advisory license instead.
And what are the staffing requirements for such a firm?
As with other category firms, the DFSA expects that the firm be adequately staffed depending on the scale, scope, and nature of the product portfolio that is proposed to be offered from the DIFC. At a minimum, the DFSA would like to see the following appointments. Board of Directors: a well-organized, diverse board with non-executive and/or independent directors and robust governance policies. The chair would have to be a non-executive director. Senior Executive Officer SEO, senior finance professional with over 10 to 15 years of core experience, ordinarily resident in the UAE. Finance Officer FO, Senior and Suitably Qualified Finance Professional. In case of a group, the FO can be from the parent company and does not have to be resident in the UAE. Risk Officer, Senior Risk Professional, can be from the parent entity in case of a group. Compliance Officer Co., Senior Compliance Professional with over 10 years of experience, ordinarily resident in the UAE. Money Laundering Reporting Officer, Senior AML Professional with over 10 years of experience, ordinarily resident in the UAE. This function can be combined with compliance, and one individual can carry out both responsibilities. The Finance Officer, Compliance Officer, and Money Laundering Reporting Officer roles can also be outsourced to a competent service provider, such as 10 Leaves. Internal Auditor, Senior and Suitably Qualified Internal Audit Professional, usually outsourced to a professional firm. External Auditor, Senior and Suitably Qualified External Audit Firm. The DFSA maintains a list of recognized auditors, and there are 16 such firms at present.
What about capital requirements? How are they calculated beyond the base capital?
The base capital requirement for a Category 3C asset manager has now been dropped to US $140,000. Actual capital resources required will depend on the nature, quantum of business and forecasted annual expenditure, as per the financial model of the proposed firm. Capital waivers may be available to the DIFC branch of a regulated financial institution having its head office in a recognized regulatory jurisdiction. The DFSA lists out multiple ways of calculating capital and specifies capital requirements for a firm as the highest of the base capital, risk-based capital, and expense-based capital. These figures are calculated using the financial models that we make for the regulatory business plan during the application process, and so are mostly unique to the company that applies for the license. The figures given below are for base capital only, and actual capital may vary depending on the business model and the associated expenses and risks. In general, the expense-based capital requirement (EBCM) for asset management firms that hold client assets is calculated as 13 by 52 of the annual audited expenditure of the firm. Asset managers that do not hold client assets are now exempted from the expense-based capital requirement. Calculation of capital is a detailed process and involves many factors. We recommend that you contact us for more details on the application process and capital calculations.
Can DIFC firms service clients outside the center and in the greater UAE?
Yes, they can. Sheikh Mohammed bin Rashid Al Maktoum issued Law No. 5 of 2021 relating to the DIFC, which brought further clarity to the rules governing the promotion and supply of services and products for firms registered in the center. The revised law clarifies that DIFC-registered entities are permitted to provide services and products outside the DIFC, provided that the primary services are offered from within the DIFC area. Additionally, marketing and promotional activities are allowed outside the center. There may be additional rules to follow, for instance, when actively marketing funds from the DIFC. A passporting regime exists in this case, where the fund manager can register for a passport for the fund to be marketed in the UAE and the ADGM.
Can a DIFC-based asset manager manage or advise on crypto assets?
Yes, a DFSA-regulated asset manager can manage and advise on crypto assets, provided that they are recognized crypto tokens. The DFSA has procedures for recognizing crypto tokens and maintains a list of such tokens. The current list of DFSA-recognized crypto tokens includes Bitcoin BTC, Ethereum ETH, Litecoin LTC, Toncoin TON, XRP, Zetacoin Zeta, EURC, USDC, Ripple RLUS.
That's great. Now, let's talk about the licensing process. What does it involve?
The DIFC application process commences with formal introductions to the DIFC and the DFSA. Following the introductory call, a detailed regulatory business plan (RBP) is prepared, along with financial projections, for a quick review by the regulator. The comments of the regulator are incorporated into the RBP, and a comprehensive application is compiled, comprising policies, processes, and other related documentation. The KYC and associated forms of all key individuals are also prepared for submissions. The formal application is then sent across to the DFSA, who reviews the pack over a period of 15 to 20 business days and then accepts it. The detailed review process then commences, and this can take anywhere between 60 and 90 days to complete. The regulator maintains communication with the applicant at all times during the review, reverting with an initial review 2 weeks into the application, and then follow-up reviews thereafter. The DFSA also meets with the SEO, FO, and CO/MLRO designates and conducts a detailed interview with them. A key milestone is the issuance of an in-principle approval, or IPA, which is issued once the application is successful. The applicant then proceeds to satisfy the in-principle conditions, and this involves the setting up of a legal structure, opening a bank account, and depositing the share capital in the account. Other tasks include finalization of auditors and obtaining professional indemnity insurance for the firm. Once done, a final submission is made to the DFSA, following which the regulator issues the financial service permissions and the process is then complete. The firm is now open for business.
And what's the cost breakdown for setting up in the DIFC?
The Dubai Financial Services Authority, DFSA, is responsible for reviewing and approving all applications for financial services. Costs depend on the activities applied for, which puts the applicant in one of 5 categories. Generally, there are 2 components of DFSA fees. One, an application processing fee, and the other, an annual licensing fee. Application fee, US $25,000 for an asset manager license application. The DFSA may charge an additional 100% fee for complex structures. License fee, from US $25,000 for an asset manager license application. From 2025, an additional US $4,000 is charged as an annual fee per additional activity. The Registrar of Companies, ROC, helps to set up the legal structure of the DIFC regulated firm. Shareholders can be individual or corporate. There are many options available, such as private company limited by shares and limited liability partnerships. In case of private company limited by shares, the costs for setting up include application for reserving a name 2 working days, US $800, application for incorporation of a private company limited by shares 5 working days, US $8,000, commercial license on incorporation 5 working days, US $12,000 annual fee. Data protection. The data protection notification is part of the process of registering a new entity in the DIFC. The costs involved are as follows. Registration, US $1,250. Annual renewal, US $500. Office spaces. Every entity registered in the DIFC is required to lease a physical office. You can choose from the gate and surrounding buildings or other buildings within the DIFC, such as Emirates Financial Towers, Central Park, Park Avenue, Burj Daman, and Currency House. Prices vary depending on the space availed and the building. Here is an indication of the prevailing rates. New DIFC Fund Center, US $27,000 per annum for a flexi desk, US $42,000 per annum for a fixed desk, and approximately US $50,000 per annum for a 2-desk private office. DIFC Business Center, from a 1-desk office at US $30,000. DIFC Fitted Offices, from US $55 per square foot. Other buildings, from US $50,000 per annum. Let's take a quick look at the visa-related costs involved in setting up at DIFC. To begin with, there's a one-time fee of approximately $630 for the establishment card application. In addition, companies are required to place a professional services agreement PSA deposit of around $682. When it comes to employee visas, the cost starts from $1,500 per visa. There's also a PSA deposit of $682 for each visa, which is held as part of the regulatory requirements.
And finally, tell us, how does 10 Leave support this entire process?
We provide turnkey services for DIFC Category 3C asset manager licenses. From initial consultations to assistance in authorizations, to assistance in preparation of the legal documentation, 10 Leaves helps you navigate the DFSA rulebook and submit an application that is comprehensive, complete, and compliant. Our services include assistance in pre-licensing, which includes reviewing the business model and advice on the applicable regulatory framework, preparation of the regulatory business plan and comprehensive financial projections, preparation of all policies, processes, and manuals required, provision of outsourced services, including outsourced compliance officer, outsourced finance officer, and outsourced risk officer services, assistance in recruitment of senior management, provision of well-qualified and experienced non-executive directors, finalizing the legal structure, including holding company setup and customization of memorandums, and finalization of lease space, bank account opening, and obtaining financial services permissions. At 10 Leaves, we also offer post-licensing services, which includes compliance, finance and risk outsourced and support services, VAT and corporate tax services, secretarial services, variation of permissions, compliance remedial measures, compliance audits, training, senior level recruitment services. Our solution focuses on comprehensive training for directors, senior executive officers, finance officers, and compliance officers. We equip them with the knowledge and skills needed to successfully clear interviews conducted by the DFSA during the authorization process and for ongoing compliance. A lot of our Category 3C clients are startups, where experienced investment bankers set up their own shop. In these cases, we also assist such teams with corporate and commercial documentation through our legal consultancy 10 Leaves Legability. And lastly, we assist in the drafting of founder agreements, shareholder agreements, investor agreements, share vesting/ESOP plans, client/supplier/distributor agreements, employment agreements. We also provide services in Luxembourg, Saudi Arabia, India, and Mauritius.
And that's a wrap on our comprehensive guide to the DIFC Asset Manager License. We hope this deep dive has helped you understand every aspect of the process, requirements, and opportunities available. This podcast was brought to you by 10 Leaves. For more information or to begin your DIFC journey, visit us at 10leaves.8. Until next time.